this is a very gradual trend to where Chairman Powell wants to get to. Does he have the time to wait for that trend to play out to something that's a lower statistic?
I think you really nailed it. That's the challenge. Now it's moving in the direction that they wanted to move. Finally, it's taken a long time to get there. Now, as I've mentioned before, what they're hoping for is this immaculate disinflation, where you just slowly weaken the labor market. Unemployment rate only goes up to about 4.5%, which is not far from what they think of as the long run average, and the inflation rate comes down. Now, the hot number on wages is really not consistent with that. We're going to be getting another labor market report before the Fed makes its next decision. We'll be getting a lot more inflation data that's coming in. But as I said on this program before, the Fed's not going to quit until the labor market quits. And this is not a quitting labor market in these data.
How do you understand the average hourly earnings and how much they've gone up? I mean, given the fact that people were saying that we're starting to see this process where suddenly workers are losing some of the power that they gained in the immediate aftermath of the pandemic, does this fly in the face of that and really confirm that perhaps we're in a different environment with a smaller workforce and perhaps a greater sort of thrust to labor's power?
Sure. So labor force participation is really key to that, and Mike had mentioned that. That's one of the challenges that the Fed has had. You've got this lower labor force participation. You've got demand being continued to be very strong. Some of that had been from fiscal stimulus from before, but continuing on with fairly strong demand. And tight labor market means really one thing, which is wages are going to go up. The hope is that they won't go up quite as fast going forward, but that's really that so far the data are not telling us that.